Welcome to Trading Lounge and the Commodities Report, and starting with the 5-year US yields here on a weekly chart. So just to go back over this, we've got a very clean wave 1 here and 2, and a very clean wave 3 here, and a wave 4 here, and then we're looking for 5 waves up here. Once we get these 5 waves up here, then we'll look at this as a wave A. I mean, you could look at it as a wave 1, but that would be pretty wild at that point, because wave B here and then a wave C here, and then you've got a sort of a double top at this point from the 1982 highs when interest rates were up at retail rates were up at that high there. So to put this as wave 3 over here as 1, 2, and 3, it's possible. I mean, that would be mind-blowing, wouldn't it? I mean, that would be, anyway, I have to wrap my head around that, but we definitely have a nice clean 5 wave structure here. So we're going to have a correction, and then we're going to have another move up. Okay, so this is kind of interesting, because if the US dollar is, chasing the yield, then we would need to look at the US dollar also in some sort of ABC pattern here. So it's coming over the dollar here for a moment from the top here. We'd have to look at this as an A and a B and a C. But we'll come back to that in a moment. Let's just let's cut in here to the daily chart here for a moment. So this gives us our wave 3 and 4 here, and let's just get this into line a little bit further. Is this on some sort of, there we go, it's a bit better. So basically from here we're looking at 1, 2, 3, 4, and 5 up here for 1 and 2. So we're moving up into this third wave here. So to get wave 5 up here. So we'll see a dance across this 5% mark here. So pretty much a classic trading levels pattern here. The arrival, the reaction, the first high above the level, and then an A, B, C pattern over here. So it'll be this particular pattern here for this. So we've got this arrival. We're here. So we're in this leg here, coming up to that 5%, then an ABC here. This will probably pull back to this one at that point, but this will be the pattern across that level. So that is also the same for the 10-year yields as well. The same thing to the upside here for this, with the wave 3 and 4 and 1 and 2, and continuing to move higher up there. And for the Australians as well, the Aussies will be the same as well, slightly different pattern, but I'll need to probably adjust this, but yeah, still heading up higher here for this. So that's where we are at the moment with this, so pushing up. And we're seeing, on the flip side to this, we're seeing the this is just the iShares treasuries here. So we're seeing these, move down in the same pattern, really, the 1, the 2, the 3, the 4, the 5. So, nothing sort of new to sort of say about this. So wave 3 was quite long. So the extension's in wave 3. So that means that the distance of wave 1 and wave 5 can be roughly the same. So certainly take out this low down here at 90. So we'll be down, closer to the 80 sort of area here for this. And you can also see here too, this will be the same, for the yields going to the upside as well. We could probably look at this as 1, 2, 3, 4, 5 for 1 and 2 here, and then 1, 2, 3, 4, 5 down for the third wave here, and then the fourth and the fifth. I normally find that in Elliott, the third wave, I was counting 5 waves from 4 to 5 here. The third wave here normally comes in around the low here, and that creates a complex wave 4 at that point. But still, whichever way you want to look at it, we're further down to the downside, and that will be the same for the the BUNDs as well for folks in Europe and pretty much all around the world. Everybody, I mean, all the centrals are, following the same policy one way or another. There's Australia have got their rates below the US rates, but New Zealand have got them above the US rate, which is, all pretty sort of normal. Anyway, so not all, they're all in the sort of, in the envelope there somewhere with all of that. But yeah, so bonds down, yields up, dollar up as well. So with the dollar here, there's different ways to count the dollar. One of the why there's two different ways to count it is because this move here is in 3 waves. Okay, so that's that's one clear thing. So we can look at that in 2 different ways. We can look at it as from the top here is 1 and 2, and then 3, 4, 5 for the, and we'll call it wave A here rather than wave 1. And then we could look at this as an A wave here, a B wave here. It's quite common for the B wave to take out here, a bit of an expanded flat. In that case, the expanded flat would see this market move up here, just taking the top of wave A out into B here somewhere. Still a little bit short on the, and then this wave C here would have the same sort of length as this. So while this is correcting down here, so will the yields be, you know, doing that. So we still got looking at the yields, and we still got further to go to the upside here. I mean, the other point with this too is that, just while we're on this count here, if I was doing this count here, then I would have to take this to on that wave 5 low here, which would leave the 50, 60% there. You know, it's just sticking a flag in the ground. You know, it doesn't mean that much. Yeah, or if we looked at it in a different way, using this, because this is in 3 waves here, we can look at it as a B wave, or we could look at this as wave 3 here with an A, B, C, D, and E here, and then have 5 waves down, and look at this as wave 5. So if I come in from the futures into the spot here for this, then we can look at it like this here with an A, B, C, D, E for 4, down for 5, and then an A, B, C up here. So this move up here, you know, if it's this move here in 3 waves, that's really going to put the gold market out a lot, and some of the other metals that may be in other markets that are, you know, that are affected by the dollar. So gold could have this particular pattern here in reverse, you know, or gold will have this pattern here where we have 5 waves up to here. This is my sort of, this is the one I think is right, but you know, we all get hammered. You know, we all have our day in the sunshine and when the day in the day in the rain. You know, so but the reason I think it's this one here is because of the bond yields. If I go back to the treasuries over here for a moment, you know, it's a pretty smooth run down here. I don't think we're going to get some sort of move here and then back up here and then down again, you know, in some sort of more complex sort of wave 4 situation over here. I don't think that's the case. I think it's kind of free falling quite nicely at the moment, you know. And the flip side to this is the these yields here too. So we're looking at the 5 years are nice and clean here, so we'll just look at those. So really we've got, you know, while this here is, I think I've got this right as 1 and 2 and 3, 4, and little 1, 2, 3, 4, 5 here for 1 and 2. And when we take out the top there, that will make that a little bit easier, you know, because on the 5 years are racing ahead a little bit. Some of the other ones are not quite 30 years and haven't taken the top out here yet, I don't think. Just check on the 30 years here. Oh, close, yeah. You know, that's why I was looking at this as a B wave, just shooting the breeze. You know, I'm always looking at different patterns to see what's what. So it's possible for the, you know, to do that, but otherwise we're the 10 years here. So I think the 10 years still they haven't taken the top out here either. So we've got to get sort of past that. But there's a good case for 1 and 2 here, 1, 2, 3, 4, and 5, 3rd, 4th, and 5th here. Wave 2 is really small, so there's something not quite right here. I'm going to have to sort of, this will probably just expand up, because what kind of happens with the wave count is as you know, you can get your 1, 2, 3, 4, 5 here, and life is good, and then you get your ABC pattern here, and then you know, move up or top out or whatever. The other one is that you get this wave 1 and 2 here, and you think you've got wave 3 here, but it's actually another 1 and 2. So you've got 1 and 2, 1 and 2 here, and then another 1 and 2, and you know, you try to count that up as 5 waves, and you end up with a sort of a structure like this here. Still 5 waves, just the third wave is extending out in all of that. So they can sort of catch you out a little bit. So it's probably catching me out on this one here. But yeah, all I can say for sure is that I'm seeing impulse waves to the upside and corrective waves to the downside. So that means that it's pointing me in that direction. You know, I know that's simple because it's pointing, going in that direction anyway. But to, you know, how does one confirm that? You know, how does one, you know, have evidence for that? You know, besides eyeballing it, you know, or gut feeling and those sort of things. So, which you find too in a lot of cases if you're sort of old and crusty, been around the block a bit. Anyway, that's all of that. But just coming back to the dollar here, so this dollar, you know, it's going to be moving higher. So gold and silver are going to be moving lower. So we can only hope that this is at this stage is that this is from B to C here. Based on what we can see with the yields, would be the correct way to look at this. And then that would be the correct way to look at gold at that point, you know. This is just the dollar. I won't get into well, the dollar's at 103 here, the DXY. So you're going to see some sort of classic trading levels pattern here. So the arrival, the reaction, the first high above the level, some sort of ABC, and then further up at that point. So we don't need to go into that really because stuff. So this is gold. This is a daily chart here. This is wave 1. This would be the A, the B, and the C wave back here. We've still got a fair way to travel here, but we've still got a fair way to travel on yields as well. And you know, the retracement level for the US dollar is up, you know, at 107, 108 in that sort of area there. It doesn't have to go that high, and this doesn't have to go this low here either. So all we can do is count it down through here. We know the dollar's going higher, so this will push this down here further as well. You know, and yeah, so that's it. So how far will it come down is the question. I mean, this length here is roughly the same length as this one here, because sometimes there's a bit of equality between the length of wave A and wave C. It doesn't have to. Wave C could be 61.8% of this here as well. So there's different ways to view this. Let's go in and have a look at this on the intraday on 20,000 ticks. Okay, so yeah, I've just got to sort of drag the count down, you know, somewhere down into here. Now, as I mentioned yesterday, that I wasn't going to get too, I'm a little bit busy trying to get the new site ready. We're getting there, always getting there. But so yeah, I haven't pulled all this apart. Maybe I've done it on the small account, but it doesn't really matter at the moment, because as I mentioned, we're going to come down here. We're going to get some bounces. It's going to get a bit sort of rough while the DXY's traveling, doing a classic trading levels pattern across 103. Then we're going to see a series of wave 4s here, 4s and 5s in this area here. So don't go short, don't go long. It's going to get choppy. This is where you can lose money, all those sorts of things. So these will be a series of 1s and 2s in here. And this is the starting of the third wave in here. So we need all of these 1s and 2s here to play out as 4s and 5s over here. So we're not done here, you know, for a long shot here, you know. So yeah, look, we can look to short this once the 1900 becomes the resistance. We can get if that's a 1900 here. Once we come through here and we go back up and check, then we can look to short here and here. And most of the time the market will actually come back up. Most of the time, doesn't have to, but most of the time it'll come back above the level. This is the most common pattern here, where we come bounce through it here, it runs out of steam, goes back, checks supply, sellers, and then we can get it over here. So it's a process of going from, you know, support to resistance, and then having a pattern that you understand that's rejecting that particular price point at that point, and then also getting the Elliott count in line with that, and if you can, also the volume to confirm the price action. So anyways, there's a lot to go in here, and so I'm not really going to get involved in it, but the main point is that we'll be down here somewhere further. There's still further to come for all of this. So that'll be the same with gold stocks as well, mostly speaking, not all. And GDX here. So with GDX here, counting it from the A wave to the B wave to the C wave down here, is a little bit tighter, I have to say. It's quite sort of nice. I haven't missed anything here. I've got 5 waves here, 5 waves here, correction here, so that's all good. That's 1 and 2, that's 5 waves. Yeah, a bit dodgy in here, but that seems to be okay. That's okay. So we're looking for wave 4 here. This has dropped down nicely. I can still see if we take this as 1 and 2 in here, we still need probably a couple of bits to go down here before we get this, and then there's going to be this here, and then we're going to see this down here. This wave 5 will be roughly the same length as this. This is actually a very sort of conservative short sort of count at this point, so this is kind of finishing off GDX rather quickly before the other market, so I don't really know if this is going to be the case. We might need to extend it out further. Yeah, I don't know how to do that actually. Normally I can see it, but I just can't see it. The penny hasn't dropped at this point, but that's okay. I'll get it. But yeah, I think we should be expecting further downside down into 25, and yeah, just it's more of a timing thing, you know. So we'll just definitely there's a slight issue here, just a slight one. That's not a big problem. Just trying to see how else I could see it. Anyway, I'll leave it. But anyway, the main point is that we'll be down into $26.50 to $25 for GDX, and silver's the same as well. So the A wave, the B wave, and down here further. So we're going to be down at $21. 21 and $20, sorry. So this is a CFD product, so they price it differently, and they've got to kind of make their own market a little bit as well. So coming into this low here, as I said yesterday, it's going to get bouncy and rough and all the rest of it into $22. So I wouldn't sort of bother about doing too much here. It's the same as gold with 1s and 2s and 1s and 2s, and this will be 1 and 2 and 3 and 4 and 5 here for third, fourth of it. So it's got a it's not going to be good trading in here. You know, all of this big pattern here in here, right, is going to be all like that. So that little pattern in here, it's all pretty choppy. That will be a small fractal pattern of what we actually need here in the bigger pattern here. So nothing to be had here at the moment. So metals and mining. Okay, so we'll have a look at copper and nickel and or copper and iron ore at least. So this particular sector here is mainly sort of US stuff, but it kind of gives a good idea, you know, even, you know, for the BHPs of the world and the Rios and all the rest of it, it's the kind of thing. So I've got 2 counts here. So I've basically got a triangle pattern that will give me an A, B, C, D, and E here, and then a push up at that point. The other pattern is that it takes us lower and drops below this low here as a W, X, and Y here with an A and a B and a C wave here to take this out here. So not quite sure the best way to view this just yet. But either way, for the metals, we will be still got more downside to come here. And obviously at this 50 for this particular sector, there's going to be, you know, support here, but we've only got 3 waves up here so far, not 5 waves. So, I mean, it can be bullish. It's only technically like bearish. If it takes out the low of wave B here, then it confirms that that's 3 waves here. And this is 1 and 2 and 3, 4 here, and then 1, 2, 3, 4, 5. So that's sort of that. So we got that downward pressure on those markets. So let's just go to the commodities. We can just use this here, can we? So commodities, and let's have a look at the, I mean, just with the futures, with the copper, sometimes we look at it with LME and then high grade US copper and then sometimes the futures market here. But in all cases, they're all kind of the same. So what I've been trying to sort of figure out is this move here an A and a B and a C wave, and that's the top, and then we come down here. So we waited for this to, you know, finish off here, and then we're waiting for the turn here. It could be bullish in terms of 1 and 2 here and 1 and 2 here. Either way, it doesn't give us a buying opportunity, because I certainly won't buy it at the 50%, 60%. I mean, there's going to be support here anyway. So we just got to give it time here. It's not to say that it can't go up here. But there's a 50-50 bet at this particular point in time, and it is sitting deep in support here, so it's going to look a little bit bullish here for a while, but we'll just stay with that for a moment. And nickel, iron ore here. So with iron ore here, you know, I can see that it's got, you know, when we look at Singapore, you know, seaborne pattern here, we can view it as an A and a B and a C wave down here, and then wave 1 here, and you know, we can put this wave 2 here. We could put this where's my big wave 2 in here somewhere. We can put this big wave 2 over here, or we could bring it down over here further. The Chinese market is a little bit different. We'll have a I'll just want to check on that. So basically what we're trying to figure out here is that this move down here so far is in 3 waves. This looks like a wave 4 and drop down for wave 5. So if that's the case, we've been waiting days for this. If that is the case, then we're going to be left with 5 waves here. So that means we'll get a rally and then another 5 down at that point. So we'll be coming down further. Let me just check on China here for a moment at the Dalian exchange. So yeah, so with Singapore, this A wave here is fine, but on Singapore it comes down and takes out the low here for this. This is traded in yuan, and the other one's traded in US dollars. So a slight difference in the way you can interpret this here. So I've just been running both counts, really just try to take a balanced view on the situation, you know. But when I've got 2 counts, all I can do to resolve the problem is really work the intraday counts. And here we've got 1 and 2 and 3 down here. So if this is going to be wave 4, if we do get a break lower here, that will give us the 5 waves down at that point. Otherwise, we could sit this as wave 2 over here. And I was also thinking, you know, because it counts better as 1, 2, 3, 4, 5 here, as an A wave, a B wave, and a C wave here. But I could, in all honesty, look at this as wave 1 here too, with an A and a B and a C wave over here. So even if I get 5 waves here to the 61.8%, so then I still, based on that, then I still have to, even if I get a move here, and then I get an ABC pattern here for this, or 3 waves, it could be bullish with 1 and 2 and 3 going up, or an A and a B and a C, that would trigger the short trade at that point. And if that gets triggered, then we can be short in, obviously, I think Rio is a good one. Rio basically mirrors this market. FMG is got a few other little things going on. So Vale would be the same as well. Vale are delivering most of their stuff to China. Yeah, but that's the other thing with the iron ore market, you know. I mean, China's got their, they've, another year or so, they'll have their high-grade iron ore coming out of Central Africa, and they won't need to buy it from the other boys, the other kids on the block. So, yeah, anyway, just chilling on this, just waiting to see what happens. So, yeah, and also here as well, I mean, I've got this as an A and a B and a C wave up here. Let's just see, you know, there's going to be tough around the 50 here, and I knew that. It's just going to be bouncing around for a while, so we don't have to make any decisions yet on this being anything at all. I don't see any safe trades occurring right now. If I had to bet, it would be on the bearish side, but I would want this as a classic trading levels pattern on the 50 to do that, you know, for the other markets. And that means coming down here, there'll be the bounce, which we get now, then eventually it will push through here, and then it's probably do something like this and then come down at that point, you know, and then we can capture it over here. So a fair bit of work to be done here just yet. Nothing to nothing to do on that side of things. So then we come over to the crude market, the energy sector, so crude and gas. So yeah, yeah, look, I won't do the whole spiel again about the bigger picture. We were looking at, we had wave 3, 4, and we're looking for a top. We could count 1, 2, 3, 4, 5, and that was good. We also thought, well, it's a bit small and all of that sort of stuff. Can we look at this as wave 1 here and have wave 2 come back? That was also sort of possible. But then we got 5 waves down here and 3 waves here, and I can see that we still need to come down here further as well for this. So that's probably, I don't know if that needs to go there or there, but anyway, we can resolve that. And that definitely goes there. That probably goes there, I guess. I don't know. It looks quite good there. Anyway, I've got to just check on that. And this will be 1, 2 here. So we still need, is that done and dusted there? That's 1, 2, 3, 4, 5 to there. Then we have that one. Might be a little bit more to come here. But anyway, it doesn't really matter here. We don't have a long trade here yet. We're just basically waiting for this to come down and finish off here. Now, the thing is here is that once we get this, you know, because this could be wave 4 here, and this could be wave 4, or we could have wave C and a more serious top here. So if it is a more serious top up here, then we'll have to get past these 5 waves, 1, 2, 3, 4, and 5 here. Anything below that 5 waves, and then it opens up a can of worms to the downside at that point. Otherwise, we start looking for long trades over here. That's kind of it in a nutshell. I'm just looking to see if I can see my other chart with the oil fund there, just to have a look to see. Yeah, it's not going to help us much. This is just this one here. It's the same picture. So we've got to figure out if this is bearish or corrective here for this, you know. So it's not really helping. So I won't bore you to death on that. So yeah, so we just have to wait here for this. Natural gas is a little bit the same as well in its own way. So we counted 5 waves up here, so that was all good, and then we were counting down here, hoping to get an ABC at this point, and then we end up getting another wave 4 and 5 here. So then we had 5 waves down here. So then we had to go through the motions of getting the A wave, the B wave, and the C wave up to here. So that's certainly fallen out of bed overnight, that one. So the question here now is, you know, and also too for a more bearish picture, can we look at this being, you know, wave? This is our 50-60% retracement area here. So, I mean, wave C down here, normally they're more lazier than wave A. Normally wave A is quite sharp in the markets, and it freaks people out. I think that's the end of the world. But this one here this is actually much sharper, isn't it? You know, which is normally we see the wave C this same as the wave A or lazier, you know, but it's not. It's coming down quite sharp. So it's kind of really got a bearish sentiment to it. It looks like 5 waves from here to here. So what we've got to be careful of is, you know, we could put this wave C here of 2. That's possible. But we also need to work out that, you know, are we going to get a wave 2 here and then down a bit, you know? I mean, that also looks bearish here as well. It looks like the next little wave 1 to the downside here as well, you know, like a little 1 and 2, and then, you know, just continuing down here. That's what that looks like. Let's just have a closer look in here. That's 5 waves. That's 1 and 2, 3, 4, 5, 1. That's 5 waves to this point here. So if this is not bullish, then this is going to be more bearish. And this here looks like 1, 2, 3, 4, 5 here. This is bearish. This is bearish. So, Yeah, where's my other fund? My just going to have a look for my gas fund here. This is kind of interesting. This this is the US natural gas fund here, and so this is different. This is you know, the gas market, the natural gas market has got all of this, right? But it hasn't made new lows here. It kept above these lows, where this one here forced itself down here a bit further. So this is not 5 waves here. So this is an A nice impulse wave here, a B and a C wave here for some type of wave 4 and then wave 5 here. So what we've had over here, we've had 1, 2, 3, 4, 5, and we've been looking at that. Could be wave A or wave 1. I kind of went with wave A, put wave A here because if this was going to be a wave 2 pullback over here, it should have been something just here like an ABC pattern, but it's bigger than Ben-Hur over here, so it's more like a B wave here, you know, sort of giving that more gravitas to that. So then we look at this here, you know, this moving up here. Normally there would be a relationship between wave A and C, but coming into a big number like 8, because it's the third strongest number according to me. So it sort of stopped it in its tracks here, but it's still a reasonable size compared to this. So the question is, you know, do we put wave 2? Do we put wave C here, and that's the top, and we come in, we're going to make new lows here, or we're going to? I mean, we could end up with a larger correction here as well. I mean, we could end up with like a triangle pattern in here too, you know, with this as an ABC for the A wave here, some ABC for the B wave, and the C, blah, yada yada yada, you know, and then come down here, you know. So there's a lot that can go on here, so I just got to get my head around it a little bit. So we're just going to leave this, and if we go back to the 50k here, I think it was. Yeah, we've been talking about this until the cows come home, haven't we? So anyway, we don't have, let me just clean my mess up here. No idea what I was talking about there, but so we're looking at this here moving to the upside here. So in a way, we're looking at this as 1 and 2 here and putting wave 2 over to here. It's quite big for a wave 2. That's the haunting thing, you know. So, I mean, the other way to look at this here too, I think I pointed this out here, which kind of fits really in a way when I think about it, is putting wave 4 here, because if they're big and ugly, it's either going to be a wave B or wave 4 here. So we could actually have a top in here for this, but I can't prove that. The only way I could probably prove it is have this, we've got this as an A and a B and a C here at the moment, but as I just mentioned, it looks like it's more than that. So if we get this here as 1 and 2 and 3, 4, 5 here, if we get 5 waves here, then we can trade the other leg to this. This will be an ABC back, and this may not happen either. I'm just shooting the breeze, but this is the leg. If we get 5 waves here, then we can short this leg over here, and this could take us into a move like this. So that would come down here. So it hasn't, this wave 4 hasn't come back to the 38.2%, more like the 23.6 or something, but it doesn't really matter here nor there. So that would be, this is a possibility. So we'll put this 3 back in over here and in front of the wave C at the moment. So this is what we could be looking at. On the futures, this counts actually quite nice up here as 5 waves, by the way. So is that it? I don't know. We'll just keep working on that for a moment. Anyway, we've had a few trades in there, and we caught that nice move to the upside, and we're looking for a long trade here. We patiently waited for everything and did everything right, and so I feel okay about everything, but yeah, I mean, if I had to whack down a bet on, you know, black or white, well, then I'd definitely put it on the short side at the moment, from what I can see on the intraday basis here. But I think I'll just wait for a better a better setup than this. Make sure we don't get trapped in. If somebody else has got a different count than this, or some other thing that they're pretty confident in, please send it over. All counts help. That's why I put a new chat module in the new website, so people can share videos and charts and those sort of things, and help me out a little bit. Yeah, so anyway, let's just see what happens here. So this is not set in stone, any of this here, right? We're just sort of shooting the breeze here on this. We don't have a long trade, so we might as well, you know, talk about the other side of the market while we're up here. Yeah, no, but I'm quite happy with this count. I know that it overlaps, but apart from that, I mean, you could go a W and an X and a Y here. I could see that too. That's fine. Okay, I'll leave it all at that. I don't have any answers at the moment for that. Alrighty, cheers.